Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live copper showcase brought to you by Red Cloud Financial Services. I'm Mark Bunting, the host of RCTV. We have another great show lined up for you today. We have executives from 5 different copper companies. They're going to be talking about the macro picture for copper, their specific projects and prospects as well. And at the end of their 10-minute or so presentations and conversations, we were going to have a panel. We will talk about copper's fundamentals and the macro picture and all the volatility and uncertainty currently going on. Is it affecting their companies? And we'll get their views on all of that. Now, as a table setter, as usual, we're going to bring in Taylor Combaluzier, mining analyst at Red Cloud. And he's going to look at those fundamentals for copper longer term, and we'll see what he has to say. Taylor, I see you there. Thanks for joining us. Take it away.
Great. Thanks for the intro, Mark. Today I'm going to talk about some of the key reasons why we have a positive view on the copper market in the long term. For a more detailed discussion on the copper space in the shorter to medium term, and to hear my top picks, I would direct viewers to see the replay of our Copper Showcase Day 1. That's available on YouTube and redcloudfs.com. I'd also point viewers to our copper market update report available on our research portal. So looking at today, copper prices have been marching higher in 2025. That's largely due to the looming threat of tariffs from President Trump. Today, LME copper is sitting around $4.25 a pound, while COMEX is at $4.90 per pound. So that differential is at 65 cents per pound. In terms of equities, we have seen prices pull back due to the softening of the copper prices following their huge run-up in response to the tariffs and the fears of recession due to trade wars. That said, given the signal détente between the Trump administration's trade war with China over the last several days, we are seeing a rotation of capital from gold equities into the copper equities today. Global X Copper Miners ETF is down still 5% year to date, though. In the shorter term, just going to provide some high-level summaries here of our outlook. Again, I point viewers to the day 1 of that copper showcase to see the replay. Currently, potential tariffs, a weaker US dollar, and tightening concentrate market are supporting copper prices. We do believe there are several other catalysts that may help provide momentum for the junior copper mining sector. Those include, firstly, measures to increase the American mineral production. That includes several executive orders that have been signed to expedite mining projects, as well as a bipartisan bill to designate copper as a critical mineral. Secondly, we point to the stimulus and positive economic signals out of China. China does plan to maintain its economic growth target at 5%. And then lastly, potentially, as we're seeing weakening US dollar, we typically see an inverse relationship between the US dollar and the copper price. And then before turning to the longer term outlook, just wanted to highlight 4 key themes that we see that could help copper prices in that medium to longer term as well. First is that AI growth will boost power consumption and thus copper demand. Second is that there has been a lack of reserve growth as well as disruptions at the mine level. Thirdly, depletion and falling grades at top copper mines are also an ongoing concern in the sector. And then lastly is the potential undersupply of concentrate as miners face increasing labor and energy costs. So to sum up, we do expect volatility due to tariffs and on-again, off-again fears of recession to largely drive the copper price in the near term. Outside of that, there are numerous catalysts and themes that we see that we believe should support higher copper prices. So, turning to the long term here, we do believe there will be support for higher copper prices in the coming decade. We still do expect that green energy transition to drive copper demand, though it might be pushed out a bit given current trends in world economies. Currently, greening the economy is anticipated to largely be achieved through electrification. We would expect the government decarbonization targets to be met largely by the adoption of EVs. Those require about 3 to 4 times more copper than internal combustion vehicles. So copper is used in vehicles is forecasted to surge, and that's going to be over the next decade. We still do see lots of growth there. It's projected to essentially double to 6 million tons in 2031 as that adoption of EVs and hybrids increases. Overall, global copper demand is expected to increase by 82% between 2021 levels and 2035. Turning to the supply side of the equation, the amount of copper required between 2022 and 2050 is projected to be more than all the copper consumed in the world between 1900 and 2021. So that's a pretty interesting statistic there. Currently, maximum supply shortfalls of 1.6 to 9.9 million tons are forecasted by 2035. So this really underlines the huge task of ensuring that there's enough copper capacity to meet demand. So how can this supply be increased? One, by bringing new mines online. 2, expanding existing operations or increasing output. And lastly, by enhancing recycling. Some of these are easier said than done. There has been a lack of major copper discoveries in recent years, despite higher exploration budgets. Notably, only 18 major copper deposits with more than 500,000 tons of copper were discovered over the past decade. So clearly, there's lots of work to be done on that front. The bottom line here, though, is that in the longer term, increased demand for copper from growing EV and the green economy will provide a compelling catalyst for majors to replenish and grow their copper pipeline. We do believe that junior explorers and developers are well positioned to capitalize on this looming supply gap if they are able to make a major discovery or define and advance an economic deposit. So to sum things up today, we do remain optimistic that the copper space is poised to improve over the long term. However, we do expect that volatility to prevail in the short term as the risk of tariffs, trade wars, and recession linger. So with that, I'll turn it back over to you, Mark.
All right, great stuff, Taylor. Thank you very much for that. As mentioned, we have 5 executives from 5 different copper companies who will be having conversations with us for about 10 minutes or so each, and then we'll have a panel at the end of that. Just before we get started here and introduce our first guest, here is the order that we are planning: Capstone Copper, Midnight Sun, Sterling Metals, followed by Grid Metals, and then PTX Metals. Having said that, let's bring in Raman Randhawa, Senior VP and CFO at Capstone Copper, who is going to kick things off for us. Raman, good to see you, sir.
Hey, Mark. Thanks for the invite and the opportunity to talk today.
Now, for those who may not be familiar with the Capstone Copper, how could that be possible? This company's been around for quite a while, and it has a fair-sized market cap, to be sure. But if you could just maybe give us a brief overview of the company in terms of its recent operations. Production was a record in Q4 of last year, and that was due in part to the commercial production at the Monteverde development project. So can you give us a snapshot there?
Yeah, sure, Mark. Like you mentioned, that's just the tip of the iceberg. I mean, Q4 was just the start of what you're going to see in 2025. So Capstone Copper, for those new to the story, is a pure play copper producer with a very diversified portfolio, operating in top tier jurisdictions in the Americas, so in North and South America. we stand out compared to our intermediate peers in terms of a league of our own because we operate in very stable, safe jurisdictions. We are in what we call world-class districts. So starting off kind of from north to south, we're in Pinto Valley, which is Globe, Miami, Arizona, United States. It's a long life copper porphyry potential to create another world-class district there with the copper cities next door to us. Pinto Valley produces roughly 51 to 58,000 tons of copper a year. Cozumel, when you move down south into Mexico, is in Zacatecas. It's a shorter mine life, but very high grade and generates free cash flow at any point of a copper cycle, price cycle. That mine produces, because it's underground, higher grade, lower tonnage, produces 23 to 26,000 tons of copper a year. And then moving into Chile, where a bulk of our assets are between Mantos Blancos and Manto Verde. Mantos Blancos, similar size to Pinto Valley in the Antofagasta region, is 49 to 59,000 tons of copper. And then Manto Verde is our flagship, where we just finished building the sulfide concentrator you mentioned that reached commercial production in Q3 there. That produces, the guidance this year is 97 to 112. It's roughly 30,000 tons of oxide and then about 80,000 tons of new sulfide production that's coming on at very low cash cost of $1.25 to $1.55. And then about 35 kilometers from there, we have a greenfield project called Santo Domingo, which will bring on another about 110,000 tons of copper, which takes us to eventually 400,000 tons of copper producer in size. Today, we're roughly, our guidance this year is 220 to 255,000 tons of copper. What differentiates us is we operate very low jurisdictions and stable jurisdictions, low altitudes. So from a people perspective, when you think of Chile, you always think of kind of high Andes or mountains. We operate near sea level, which is great from a productivity and attraction perspective.
All right, very good. Now, the company has said that this Monteverde project is transformational. So can you elaborate on that a little bit?
Yeah, thanks, Mark. So when you look at Manto Verde, a legacy Anglo asset, it was predominantly oxide. So it was the SXEW plant. Used to have higher grades. Since then, as you know, as you mine deeper, the grades kind of come off. So the oxide business roughly now is about 30,000 tons of copper, very reliant on kind of acid prices. But what's underneath the oxide ore body was a sulfide ore body, which is substantial. We got 400 million tons of reserve there now in our new study. And what we built was a 32,000 tons per day concentrator for $870 million. So we spent the last 3 years building that. And that's making our overall company now increase in production from 184,000 tons of copper last year, so growing 30%, to 238,000 tons at our midpoint of our guidance. More importantly, our costs are also coming off. So last year, our C1 was 277 consolidated, and this year it's going to be 15% lower at the midpoint of about 235 per pound. So MV is really that turning point for the company in terms of leg of growth. Like I mentioned, it brings on 80,000 tons of copper, very low C1. And what's actually really interesting after building MVDP is we've already put out a feasibility study on MVO, we call it, which is Manto Verde optimized. So the front end, the crusher, the ball and sag mill can do 45,000 tons per day. So in that feasibility study for $150 million, we can expand Manto Verde from 32,000 tons per day to 45,000 tons per day. And as a result, that increases production by 20,000 tons of copper per year. So that'll be a $150 million capital project, which we look to sanction about mid-year 2025. We're just waiting on the DIA permit to come in to get approved.
Now, Raman, more broadly, we know all about the volatility and uncertainty that has been unleashed by the White House with these trade wars and all the back and forth of are they on, are they off, and pausing and so on. I'm just curious what you think of the impact and what your team thinks of the impact on near-term copper demand. Will it be impacted? Will it be minimal? Will it be large? And also, basically, that's the question. What do you think of all this, the near-term uncertainty right now?
Yeah, I think the near-term uncertainty is impacting obviously what you see play out in the copper price volatility. So it's kind of moved around, but it's definitely had a floor of $4 here, despite the trade discussions and tariff discussions going on. From our perspective, when you look at even the copper concentrate market, it's extremely tight. And the evidence in that is the TCRCs are at negative, which are unprecedented. So it shows you that there's actually a shortage of copper concentrate in the market, given we're getting paid to give concentrate to smelters. So when we look at it, definitely there's near-term recent volatility due to the macro. But when you look at the medium to long term, it remains very strong. The fundamentals outline a copper deficit, which in turn will drive a higher price of copper. In addition, I don't think any new greenfield projects get built below a copper price of $4.25 more likely. I think I see in more studies nowadays. So there's definitely a lot of strength for the copper price long term, despite the GDP growth near term uncertainty. I think when you look at it, we'll talk about it. The copper deposits, the grades have declined. The lack of projects coming on. So what we see is just a deficit. And overall, I believe each economy wants to grow, and copper will play a key part in this growth in the economy.
All right, so you clearly believe in the long-term fundamentals and the supply deficits and demand as well. So having said that, and I'm not looking for you to tout your stock, but full disclosure, I was a shareholder for a while, had a nice run, and then got out and waited. And I'm still waiting. Looking at your stock down 26%, that would seem like, given the bullish fundamentals longer term, that would seem like a good opportunity. Would you agree?
Yeah, for sure. I mean, like we just talked about in the last question, I think the demand side between electrification, urbanization, decarbonization, AI data centers, electric vehicles, everything in the world's going to need more copper. And then on the supply side, as we heard earlier, it's extremely challenged. There's a lack of reserve growth. Copper grades are declining. Very few projects are being built or brought online. So like we talked about, I think we're in agreement that copper price fundamentals long-term are very solid. And when you look at our stock, I think the consensus NAV is around $10 per share. So we're trading at, let's say, 0.6 PNAV right now. And when some brokers run it at an implied copper price analysis, which shows that our shares are trading at sub $4 a copper pound based on consensus NAV. So in summary, when you look at Capstone Copper, to be honest, we're growing, we're reducing costs, we're in stable jurisdictions, we have a growth pipeline ahead of us. So I think we are the go-to stock, and we're a definite buy at these levels, and I would back that truck up.
All right, you did wind up touting the stock. Why not? $5 billion market cap, average volume in Toronto, 2 million shares. So very liquid. Great stuff. Appreciate it today, Raman. We'll talk to you again.
All right. Thanks, Mark.
Raman Randhawa, he is Senior VP and CFO at Capstone Copper. Our thanks to him. All right, we're going to move it along now to our next guest. We're going to bring in Adrian O'Brien. He is a VP of Business Development and Communications at Midnight Sun Mining. Good to see you again, Adrian. How are you, sir?
I'm doing great. Pleasure as always, Mark.
Great. Let's start, as we often do, for those who may not be familiar with the story, with an overview, a brief snapshot, if you could, about in your particular case in Midnight Sun, the Solwezi project, the Zambia Congo Copper Belt, and the team has started 2025 phase 1 exploration, and you've got 3 main targets. So can you tell us some more about that?
We do. So let's try and share some slides here. I think it would be really helpful to put some visuals to this, because it is a technical story. It's a complicated story. Are those coming through okay, Mark? Maybe not working. It is working. There we go. Okay, we got it here. So
sorry, I was muted. Go ahead.
No, that's okay. I just wanted to make sure you can see the slides. We're good. So I want to set the stage with a couple of things, and of course, getting into this a little bit more thematically, right? Where we're sitting today, where we're going, what we've done in the last little while, just to get everybody up to speed. So this is the Domes region of Zambia, arguably the top spot in the world right now for copper exploration. There's a couple of really simple reasons why. Look at the screen in front of you right now. Just about every deposit you see is 1 billion tons. This is probably the only place in the world that breeds billion-ton deposits as an average. Some of the biggest producers in Africa are there. You've got Barrick's flagship asset, Lumwana. They sit about 20 kilometers to the west of us. First Quantum's Kansanshi mine, they sit about 6 kilometers away. And of course, Kamoa-Kakula, the monster of all monsters, 1.4 billion tons at 3% copper just north of us. So this is a unique position. And of course, outlined in green, there's Midnight Sun. So, when you look at our asset, it's broken up into pieces, and it ends up in a really unique situation where you have all of these different opportunities kind of sitting that you can obviously dig into. And these are sulfide systems, they're strata bound, but here's the key thesis. These are billion-ton deposits and they're shallow. So when we talk about these thematically, much like you were just discussing, it really matters that these are easy to get to and that they come with a low capex. If you're going to get projects moving, if you're going to get them into production, you need a low capex. You need something that you can move forth. And so this is an area where you have extremely large deposits that are high grade and that are shallow, and that's really key. So, with Midnight Sun, we have these 3 big targets, Dumbwa being our flagship. This is arguably a tier 1 exploration target. It's one of the top targets in Zambia today. You've got a 20-kilometer long soil anomaly that's 0.73% copper. Average grade in the belt's 0.56. So this is ore grade copper in soil. We have drill hits. We know we have sulfides there. Giant copper anomaly covered by a copper clearing. But here's the key. When you're looking at Dumbwa, and of course this is key to how we're moving forward. This is key to who's running these programs. And of course, the fellow running this, his name's Kevin Bonnell. Kevin Bonnell was responsible for what you're looking at right here, which is Barrick's Lumwana mine. Now, Lumwana is a really great story. It was acquired, of course, for $7.5 billion 20 years ago by Barrick. They spent 15, 20 years trying to unravel this thing. They couldn't get it to work. Kevin came in 4 years ago, and he gave Barrick a tier 1 asset. He moved it from tier 2 to tier 1 by discovering satellite deposits, Camaranda and Lubwe. Those gave them a huge boost in both size and what they think will be output going forward. So if you look at Lumwana 20 years ago, it was about 900 million tons at 0.5. Today, based on the work that was done over the last 48 months or so, it's 1.62 billion tons at 0.52%. They've got 62 years of mine life. If you think about that for a second, it's absolutely incredible. And Kevin joined us because he believes that our Dumbwa asset, which I just showed you, of course, is bigger and higher grade and has the potential to be very similar to Lumwana, but these are an analog. They're analogous in just about every possible way, and that's really critical. They both run north-south. They both dip 15 degrees east. They're both basement hosted, and it's really important to understand that in this belt, you can see here on this graphic that these basement domes, which dictate where these deposits form, have a unit of rock that surround them that looks like this brown bullseye here. That's called the lower Rhone. That holds 85 to 90% of the copper in the belt. But in a very unique situation, if you look at Kamoa-Kakula and Lumwana, they're basement hosted. They're in the dome. There's only one other asset in the belt that's ever been identified as being basement hosted. That's Dumbwa. Of course, Kamoa-Kakula is 1.4 billion tons and Lumwana is 1.62 billion tons. That bodes extremely well for us. And we've got this thing to the point of moving forth. So we've developed an exploration plan. We're pushing forward. We're also attacking Kaziba, moving on both this brand new sulfide target we've discovered here, which is, yet another target for a Dumbwa type system. And then all of this oxide mineralization that we're working on under our cooperative exploration plan with First Quantum. So we're moving forward on Kaziba and with an aggressive plan to work on that. And of course, going back to my last comment about these systems being hosted in the lower Rhone, here's your basement dome, here's the lower Rhone, and we have a beautiful system there that we've identified in our work last year that we're moving forward. And so we're launching a program on that. And then last but not least, a third target for one of these billion-ton deposits, and that's called Me Too. This is the southwest corner of our property, and you can see 2 very clear targets here. Now you're looking at the basement dome itself, and in this lower Rhone again, you have these 2 beautiful targets. We've already drilled this. 11.5 meters of 3.44% copper and 11.5 meters of almost 1.5% copper. It's a sulfide system. Now we're going to go and hit it. But here's the key. If you take the work that Kevin did at Lumwana, it was such a simple methodology. When you're moving forward with these things, you can approach them in a very simplistic way where you take all of the early steps that take all of the risk out of the process of drilling and delineating the structures without going and exploring with the drill bit, which is extremely costly and can really blow your opportunity for a big discovery. So we do it in 3 simple phases. Geochemical analysis is first. So that's either partial ionic leach sampling or traditional geochem sampling at surface. Then we move to dipole-dipole IP. And there's a really simple reason for that. When you carry out the dipole-dipole IP, it gives you a clear picture of what the mineralization depth looks like, what the dip direction is, what way it's tilting in the ground, so that when you drill, you know what you're drilling before you go in and drill it, and you're not wasting holes, popping them all over the place, maybe not even getting near the mineralization. And these systems are only 15 meters thick or so. So it's really critical to get to that phase. So if we take this approach, this is how Kevin unlocked a tier 1 asset for Lumwana, for Barrick, in just 24 months. Kevin and his team drove this thing to the finish line in an extraordinarily short time frame, and that's what we're applying here. So what's the total cost for our program this year? $500,000 to start. That's what we've kicked off now. It's extremely cost effective. It's precise. It's quick. It gets us to the finish line in a methodical way without wasting time or money. So we're attacking Dumbwa, which I just showed you. We're attacking Kaziba, which I just showed you. And we're attacking Mitu on a number of different fronts all at the same time. And here they are. Dumbwa, first step, I mentioned phase 1. We've already got phase 1. We have a 20-kilometer long soil anomaly at 0.73. Now we're running IP. So what you see in front of you is 56 line kilometers of IP. It's a $56,000 program. As soon as we get the results from that, we're guessing mid-May, we're going to launch a big drill program, and we're going to find out just how big Dumbwa actually is. It's been a super exciting buildup. People have been waiting 10 years for this. Now we're going to find out. Again, applying the same strategy. We've run our partial ionic leach at Kaziba last year. We had extraordinary results. We now have 3 new targets, and we have this large oxide copper blanket we've been drilling. Now we're going to drill those. We're into phase 2 and phase 3. Phase 3 on the drilling of the oxide blankets, and phase 2 on this brand new sulfide target that we've discovered here. So this is drilling time. We've already done dipole-dipole IP. Time to go in and drill and find out how big it is. And first step at Mitu, never been done before. We're running partial ionic leach sampling down the entire western flank to get ready for phases 2 and 3, which is dipole-dipole IP and drilling. And all of that designed to get us there. And of course, moving forward with our plan with First Quantum to develop these oxide copper resources at Kaziba and Mitu. We drilled this already, drilled earlier this year, 21 meters at 10.69% from surface with 0 strip, 26 meters of 5.5%, 15 meters of 3%. This is a very high grade. We're 6 kilometers away from Kansanshi and working with First Quantum to deliver oxide copper ore to their SXEW circuit and work together to get that material there. Of course, they use that to neutralize sulfuric acid from their smelter. They've become very low on ore, if not already run out, and we're looking to be their new source feed for that material. So, extraordinarily big developments over the last 12 months, just getting started, Mark. And to encapsulate this in 10 minutes is incredibly tough. But the bottom line is this program that we've launched now moves our program on all 3 projects past that initial discovery phase and moves these forward in a transformative way very quickly and very cost effectively, and move us into that bigger budget drill program later this year.
Adrian, you did a great job encapsulating the story in just under 10 minutes. Very informative. Thank you for the slides. And the company has said they have incredible opportunities for multiple discoveries at Dumbwa for the reasons that you mentioned. And now you've brought on Kevin, who clearly seems to be an all-star in the field. Let's just wrap it up here with you, if we could, before you come back for the panel. Just on near-term volatility globally and how it may be affecting the copper sector, and also is it affecting your company in terms of your ability to make decisions, and then the long-term story and how Midnight Sun fits in.
Well, the reality is there's only one major way that this is affecting Midnight Sun, and of course that's investor sentiment. The reality is when you have the kind of uncertainty that we're dealing with out there right now, with the geopolitical environment that we're sitting in, it shakes investors. It throws them off, and understandably so. You're getting absolutely inundated with chaotic information. It changes every day, but here's the bottom line. The thesis for copper doesn't change. What's happening in the world doesn't greatly affect us in any major way in Zambia and what we're working on and what we're developing. The thesis for copper stands. It's not going anywhere. My ears are still ringing from the AC/DC concert I attended last night, was looking at the stage, looking at their 50 trucks worth of rigging, and just thinking about the amount of copper there and what I'm looking at on stage. Take that, look at AI data centers, and think about how infinitesimal that is when you compare it with the volume of copper needed for AI data centers or EVs. This is still necessary. It's not going to change. I mean, the demand for copper isn't going anywhere. So what we're dealing with is shakiness. We're on a bumpy road right now, and that's the reality, and it's going to stay that way for a while. But in terms of what it means for Midnight Sun, you do what you always do on a bumpy road. You keep driving, you keep going, you keep pushing your projects forward. The thesis for copper outlook is still a rising copper price long-term. And we're in one of the only places in the world that can actually have a transformative impact globally on copper supply demand. And as Taylor was talking about, the key here is to get big assets in the supply chain, in that production chain, into development, moving forward, and new projects discovered. So you have, in the case of Zambia, you have Barrick's Lumwana mine moving from 900 million tons and 1.62 billion tons. You have Kansanshi opening up a new 40-year lens. Now you have companies like Ivanhoe. Ivanhoe just took out 8,000 square kilometers of land in Zambia, looking for new assets, looking to develop a new pipeline. Rio Tinto has done the same. Apparently, they've taken on 6,000 square kilometers or so. So that's the key. And as far as we're concerned, it's all systems go. You keep moving forward, and the thesis stands.
More importantly, how is AC/DC?
Absolutely fantastic. Like I said, my ears are still ringing. Couldn't have written a better set list. It was amazing.
All right. And I like the analogy there. Very good, Adrian. Thank you for your time today. And we'll talk to you again. Adrian O'Brien, VP of Business Development and Communications at Midnight Sun Mining. All right. Our next guest is Matthew Wilson, the CEO of Sterling Metals. Let's bring him in here. Hi, Matthew. Good to see you.
Hey, Mark. Good to see you.
Thanks for being with us. Now, let's start with you, as I have been with our other guests. A brief snapshot of the company's, the mission of the company, but also the main assets. You've got the big project in Ontario, Copper Road, and then Adeline in Labrador. Yeah,
so I think that man, I'm jealous of Adrian and that AC/DC concert. It's all I can think of. It was one of my favorites I've seen. I think that, so Sterling, contrary to kind of what others are doing, we kind of set out with a mission of finding copper in Canada. And I think that, to frame the way that we're thinking of things in this current atmosphere and where we're at with, protectionist policies and tariffs, I know that's kind of the theme of what we're doing. Rather than kind of diving into what we're doing right away, I wanted to just highlight this. It's a really wonderful infographic that Northern Miner and Mine.com put together. And just to look at kind of the world of copper and this massive landmass that we have here in Canada, and just the lack of exploration and the lack of discoveries in Canada that we see in copper, right? You could argue that copper is the new oil. You can, all much smarter people than I have gone through the fundamentals of copper, and I believe as much as anyone that it's going to be a good thing. You heard Adrian talk about the wiring for AC/DC, and you see Friedland talking about it all the time, about how you need more copper the next 20 years than you did in the history of the world. So I think that it's just to frame the context of what we're trying to do at Sterling. We're an exploration company. We're run by people who have made copper discoveries before. Neil O'Brien, our senior advisor, was the senior VP of exploration for Lundin as they put the Vicuña district together with Lundin, Filo, and NGEX. And we've just taken a focus on Canada. As if you take a look at this map and then look at these numbers, you see that Canada, which used to be once a copper powerhouse of the world, in a world where we need copper, it's just not on the map anymore. And I think that we're focused on bringing this forward and trying to bring Canada kind of back into the realm of relevant when it comes to copper here at home. So I think that the share is off now. So Sterling, we have 2 projects. We have one that's located. We have 3 projects, all focused on large, long life, good grade assets. One of our projects is in Labrador. BHP's partner Viridian just staked 2,600 square kilometers around our 500 square kilometer sediment hosted project. But our focus right now is the Copper Road project, for which I suppose I can go through this really quickly. The Copper Road project is a is a brownfield project. It's between two old mines that produce at relatively high grades back in the 60s and 70s. The Tribank Breccia mine on the east side of the project did 6.5 million tons at 2.75, but had the zone of 150 meters that Teck was mining at 25% copper. So really attractive, strong system here across 30 kilometers. And our focus here in the middle is a known porphyry on Ontario. The green line right there is a Trans-Canada highway. And we're an hour north of Sault Ste. Marie and the U.S. border. So focusing here on our flagship asset, we're looking for a large porphyry project, which we're all quite familiar with in the Copper Road, an hour north of the U.S. border and right off the Trans-Canada highway. Yeah, I thought that I'd just skip through it right now. We're drilling at the moment. We're a small market cap, $8 million company. But again, what we like to think of is we're going for big systems in large areas with good grades. So this asset has been drilled since the 60s, lots of drilling on the peripheries. We have these large geophysical anomalies that we are chasing right now in our drill program, chasing low resistivity as it applies to kind of conductivity and increased copper zones. Our drill program is ongoing. We have a couple of holes going, and hopefully have assays coming out pretty soon. And the idea of this program is to show that the scale of the system is something that is something that could put Canada back on the map for copper, where you're talking about not even, hopefully hundreds, if not billions of tons of ore. And again, 1 hour off of the highway in northern Ontario, just north of Sault Ste. Marie. So that's kind of an overview of us at the moment. And yeah, so I know that we have a couple more questions here to go.
Right. So this is the inaugural drill program, and feel free to, without getting into the weeds too much, maybe flesh out what the team is doing and the work being done.
Yeah. So we spent a year. We got this project about a year and a half ago now. We spent about a year, a few $1 million doing all the work that no one, that is unheralded generally in our venture industry. Soil sampling, prospecting, IP, large-scale magnetics, just to kind of hone in on an area where we thought that there would be a worthwhile porphyry exploration target. Right now we are drilling. We started a couple weeks ago. The program is 2,500 meters, just to kind of test out some theories in terms of where we're trying to go and to see if we can find something of higher grade. The porphyry that's known is the historical resource here is about 20 million tons of 0.19 copper and 0.05 moly. So grade is okay, not amazing, but the resource is too small at the moment. It's kind of a pencil porphyry environment. But this project is right on the Mid-Continent Rift, and for those that know, it's kind of loops around Lake Superior, responsible for the Duluth Copper Complex, the nickel stuff all around, the Keweenawen stuff in northern Michigan, the Eagle Mine that is Neil O'Brien at Lundin helped purchase, and so there's a lot of copper known here around this system. So this porphyry is related to that large macro event. And, as most of the people here who are talking about it prior to me, you have the Chilean, you have the Andes, you have in the Central African Copper Belt, like you need to be in places in the world that are large macro scale areas for copper. And this really is. And so you have all different kinds of deposits around the Mid-Continent Rift. It's just missing a porphyry, and we're hoping that this is the large porphyry that the copper found its way into that we're going to test out. So we're drilling right now. Should have assays in the next 4 to 6 weeks, and ideally we are able to find some things that are pretty exciting here to go from surface and then at depth.
All right, Matthew, I'll save my macro questions on the bigger picture for when you're on the panel in just a while. But just to wrap up this segment with you and circle back to what you talked about originally, one of the longer term plans for the company is to really put Canada back on the global copper map. Why is that important, and why is it important to you?
I like being Canadian. I like focusing on Canada. I've worked in many countries and invested in countries around the world for 20 years. I think that we have so much talent and understanding in this industry here at home, and just we've spent so little time focusing on our own country and kind of developing it and adding extra resources to it, because there's just, you go to where copper is, right? What is the best place to find a mine is next to a mine, and I understand that completely. And that's the area code is a big deal. So I think that I like the idea of focusing on Canada. I love how safe it is here. I love that assets aren't going to be taken away from you. There are, of course, challenges for sure in transparency of just what do you do as an explorer in this country? How do you deal with different groups of interest? That is definitely a challenge, but we try and focus very strongly on areas that are top 10 Fraser Institute provinces. So Ontario and Labrador and Newfoundland are wonderful places to be. Governments are very helpful going back and forth. When you own a land claim, you own a land claim. Like it's not something that goes away. So I like the safety of the space here, but also very much so in this current macro environment. And of course, when we started, it wasn't this case, but even stronger now. Just finding things here at home where we can kind of make Canada have try and drive Canada's economy with our knowledge and expertise, and definitely in the venture financing.
All right, very good. Thank you, Matthew. We'll see you later on the panel. We'll see you in a while. We will move it along to our next guest now. We're going to talk to David Peck, VP of Exploration at Grid Metals. Let's bring him in here. Hello, sir. How are you?
Hey, Mark. How's it going? I'm doing well, thank you. Enjoying spring finally in Winnipeg.
Yeah, and the Jets. Nice start. Those first couple of games.
Go. Absolutely.
Oh, yeah, great hockey for sure. All right, so how about an overview from you on Grid Metals assets, the focus on what's now called MM, and also the joint venture agreement with the Teck Resources?
You betcha. I'm just going to pull up a series of slides here. 2 seconds here. Okay. There we go. We're very pleased that we got Teck in, and sort of the theme of the company. We're in critical metals, which is a bit of a buzz term, but we're actually in both the rare metal side and the copper nickel PG side of things. And a big focus for us at the moment is trying to navigate our way through these pretty dire markets for junior explorers like ourselves, especially in Canada, trying to raise money at under these geopolitical conditions, and all the uncertainty has been very challenging. So we're looking at alternative ways to move our projects forward. We do have a copper portfolio. It's probably one of the better or larger magmatic copper portfolios in Canada. Like our previous speaker said, we're bullish on Canada for a lot of reasons. The uncertainty right now, geopolitically, globally, who's going to line up with who's going to be able to trade with who, I think factors into our thinking. So we positioned ourselves in two very prominent jurisdictions for mining in Canada, Manitoba and in Ontario. And our focus on the copper side is really to unlock the potential of copper-rich magmatic nickel copper PG systems. So as people have been alluding to with porphyries and SEDEX deposits globally for copper, it's about scale. And for magmatic systems in particular, I think you've seen that they're pretty underexplored for copper. And there's good reasons why that is the case. But I think we just remind people that some of the bigger copper projects or mines, camps in the world, Sudbury, Norilsk, and the undeveloped but large Duluth complex copper resources just show how effectively copper can be concentrated in these systems. So that's a bit of a snapshot for us. Yeah, so if there's any follow-up, I mean, we're trying to find alternative financing routes in this, like I said, lousy market for juniors and avoiding over dilution. And we did sign a JV with Tech on our Macwa Mevo project, which you mentioned, southeast Manitoba. You can see the location of the project here. Macwa's the nickel-rich part of that system, and Mayville's the copper-rich. So if you had a follow-up
Yep.
question, I
Yeah.
can dive
Yeah,
into.
for sure, David. We definitely hear that refrain from a lot of juniors that it's a very tough market. It has been for several years trying to raise money. Everybody's hoping that will change at some point. But you hinted at some of the company's other assets, which include lithium. But is it fair to say that is sort of the main focus right now?
It is a joint focus. So Southeast Manitoba is our sort of flagship property project area. We've been active in this part of the world for almost 25 years. And as I mentioned, we're happy to sign the joint venture with Teck, which could bring up to $17 million of exploration investment into Macwa, which is nickel dominant a magmatic sulfide play. And at Mayville, we're looking at a copper rich system, and that's 100% grid. So we do have a cesium project, a little known commodity, but for us, it's near and dear to our heart at our Falcon West project down at the south end of this map, the bottom part of your screen. And that is a potential way for us to finance our copper ambitions over the longer haul. We've got some really good cesium results. We're in a similar kind of range to Power Metals, which have a very good cesium project and have done well with the markets on cesium. And I think we're right in there. And you'll hear more about that in the coming weeks from us.
I want to get back to the financing or lack thereof in terms of being able to raise money. So would you say that since, let's say, early April, if not before that, the company has actually seen a difference, that things have gotten, people are sitting on their hands even more and holding on to their money? Is that a fair assumption?
It definitely is. And there is money available. There's some flow through. But at these prices, with our market cap, it's not very attractive to our current shareholders. And we are doing everything we can to attract majors like Teck into our copper project portfolio. I think we've got the right scale, big systems in great locations. The geological pedigree is there. And the cesium opportunity is really unique to Grid and a couple of other companies in Canada that have the ability to deliver a high quality, high grade cesium concentrate to the end users, the chemicals companies. And we're very close to Tanco and the Tanco mine, which is in the Bird River Belt, same as our Mayville Macwa project. And they have about 85% of the global cesium production out of that plant. So they're a good partner. We have one agreement with them, and we're talking to other people about our cesium assets. So that could be a near-term catalyst for Grid. And again, we've got so many fantastic exploration opportunities on our 4 copper projects. We don't have time to get into them all, but certainly look at our website. There'll be some updated slides on our copper, our portfolio there. And I think, as I was trying to mention, magmatic copper in magmatic sulfide systems, mafic, ultramafic hosted. It's always about scale. It's about the right ingredients happening. And a lot of these belts are well known for nickel, but haven't had a good kick at the can, a deep dive on copper. And there's different ways to approach copper in these systems than nickel. And I think we've got the right recipe. My experience globally running nickel exploration for Anglo American, we brought a lot of bringing a lot of knowledge to the table for Grid, and I think we've got a great portfolio. If people want to look into it further, just reach out and give us a shout.
And just to wrap up here, as we try to stick to time here, David, maybe a minute, if you could, just on the consensus that copper has very strong fundamentals for at least the next 10 years and more, and how grid metals can fit into that in the longer term.
Yeah, Dr. Copper definitely leads the industry, and it's no different for us. So I feel the fundamentals for copper, as most people have been saying in the last couple of sessions here with Red Cloud on copper, are fantastic. There may be some hiccups in the short term, but there's no denying that there's just not enough development stage projects in the pipeline. And Canada has a big opportunity, as Matthew was saying, to be part of that story. It's really it's got a huge amount of upside, and so we're very bullish on copper, and our angle to magmatic nickel copper PG is focusing on copper. So I think we'll be able to unlock some value here for grid doing that.
All right, thank you, David. For now, we'll have you back on the panel in just a while. All right, so that's four of our executives. Let's get to last but not least. In terms of our show here, we have Erica Doring, Corporate and Project Development over at PTX Metals. Hi, Erica. Thanks for being with us.
Hi. Well, thank you for hosting me. This is great to be here. I'm going to give you a quick overview of PTX Metal, especially the copper project, because we're here to talk about that. So let me just share a couple slides here.
And you've got the two flagships, the W2 and South Timmins Gold joint venture.
Correct. So I'm going to go straight to the project. So PTX Metals, we're actually looking at project in Ontario, Canada, Ontario. So we really like the province of Ontario, honestly. We have the South Timmins project, which is mostly gold. It's located right by the famous Juby deposit and also Côté Gold, IM Gold gold mine. So we are right on the same kind of break. And we have the famous W2 project, which is copper, nickel, PGEs, and also a little bit of gold. It has kind of like this spatial distribution to it. So W2 project was kind of like brought on a little later after the South Timmins, and it's actually Greg Ferron, our CEO, that consolidated it. And it has, like a small mineral, small, actually, it's actually pretty decent mineral estimate that we're going to get into it in just a minute. Something very important is that W2 is actually part of what we call the Ring of Fire. So just a quick overview. I think a lot of us have heard about the Ring of Fire. And there's something that I've heard recently. Somebody told me, Erica, the Ring of Fire is on fire right now, which is true. It is real. We've heard that many times. Doug Ford, Ontario's premier, talking about how we need to develop the area. We need to push for infrastructure. We need to push to make it happen. Now it's the time for Canada to become a little bit more independent, go after their own critical minerals. So for us, when it comes to PTX Metals, this is just the perfect timing. Let's call it this way. The past 3 years, Greg came in as the CEO, and he kind of restructured the company, cleaned it up, brought on this W2 project. And here we are. We have more than 20,000 meters of drilling, more than $25 million of investment that was done in the past by Inco, KWG, Aurora Platinum. This is quite a bit of a large project, but not only, especially its exposure to the Ring of Fire, because out there, we're right by Wailu, and Juno, like they're all private. So for anybody, like any investors, retail, or either institution, how do you get exposure to the Ring of Fire and what's coming up? I know it's a lot of discussion and talks, but it looks like it's really gonna happen. A push is happening. I mean, this is the reality of it. Trump came in, shaking things off. It's time for Canada to really look at what they have and develop what they have. And that's where PTX Metals is just like, the perfect exposure to that. And all the eyes are on the Ring of Fire. I just want to show really quick why we like W2 so much. If you do a quick zoom onto that like central target, it's so far we're talking about 135 million tons at close to 0.8% copper equivalent, and that's using a 0.5% copper equivalent cutoff. This is based on like more than slightly over 110 drill holes to date, and we're currently drilling it, and we're going to keep expanding it. We want to make that resource compliant because so far it is not compliant. However, this is an in-house resource that makes sense. We're talking about Inco drill holes that is now Vallée. So it looks, very much good looking. So if you kind of like take a quick zoom into that central target, I want to highlight like few drill holes because, we currently do not have the core, and that's one of the reason why we cannot make it compliant. But when you look at, we have the assays, we have everything to it, and you look at 220 meters at 0.43% copper equivalent, or you have like very high grade, you're hitting like 46 meters at 1.75% copper equivalent, or even like 13 meters at 2.37% copper equivalent. I mean, and this is like spread out across like this major trend, major structure. So far identified, like we have at least like 5 to 7 kilometers of it. And it keeps growing. Right? So we're identifying zone where mineralization seems to be very near surface. So even though like, you're looking at 0.8% copper equivalent on average, everything is near surface. So you're thinking of making it economic through looking at it more as an open pit style production for the future. We're not going to do underground, or maybe you're going to get to underground at some point, but your starter point is going to be open pit. And when you're looking at width of 200 meters, 60 meter, 30 and so forth, with 1% copper equivalent, this starts to make sense. Something else that was brought quite a bit is the infrastructure. It's very important to come back to the infrastructure and explain that we're right next to the Webeki First Nation, and we do have access to some winter roads, not directly to the property, but nearby. However, we still have to come, fly in, fly out so far. But that's the reality of things where we are looking at, new, like potentially newly like developed roads that are going to come in. The government has been working with the First Nation. They've been doing, years of assessment, and Doug Ford has stated it like really, really well. I mean, this is just like a perfect zone. They have to make it economic. They have to develop the Ring of Fire, and here we are. So, for anybody out there, I think W2 is and PTX Metals is just the right exposure to the Ring of Fire. So here it is. I don't know if you have any questions.
We're going to join we're going to start the panel in a minute or two, but just before we get to that, PTX Metals is unique compared to some of its peers in that they have a portfolio of royalty assets, 8 different assets. And could you focus on and maybe highlight briefly some of the gold assets?
Yes. Actually, So PTX, it used to be Platinix. We're talking about 20, 25 years of life of the company. It was held by Jim Tressler in the past, and he did such a great job in coming in and out some projects that allowed him and the company to build up a portfolio of royalties. But this is more long term. I think PTX now, so 3 years ago when Greg stepped in, we're looking at short term, mid term, and longer term. So royalties, you're going to look at it at longer term. Short term, what we're looking at is really developing our assets, W2, and developing as well our gold assets, which I'm going to show right here. So our gold asset, I guess, Shining Tree and Hidden and Mallard. We released some draw results not that long ago, actually about a week ago, on the Hidden and Mallard, looking at, like close to 80 meters at 0.5 gram per ton near surface, talking about open pit again at $3,400 an ounce. Like everything starts to kind of come together, makes sense. Shining Tree, we're on the main break, between Côté Gold and Aris Gold. It's I think when you look at PTX, you really have to think as a shareholder. You have like a short-term phase. We're making discoveries. We're developing it. Like a mid-term phase. Through that development, you're gonna have exposure to development and of Canada towards copper and nickel and PGs, like critical metals. Like this is very important. So that's where we're at, and we also have gold as well. So that's where we're at, and I definitely look forward to the future for this company.
All right, great, Erica. Stay right there. We're going to start the panel now and bring in our other guests as well. We've got Raman Randhawa, Capstone Copper, Adrian O'Brien. We've got from Midnight Sun, we've got Matthew Wilson, Sterling Metals, and David Peck, VP of Exploration for Grid Metals. All right, I'm going to kick things off here with a question. Let's start with Raman, who started the show for us, and then after that, feel free to kick around the question and follow up each other's answers. So, Raman, what are the challenges, if any, in executing on your company's strategy in the near term amid the uncertainty that we keep talking about geopolitically and the economic headwinds as well? Was Raman gone? Okay, sorry. I think I knew that. Matthew, go ahead. How about you?
All right, question again.
Is your company strategy impacted by all this geopolitical uncertainty and economic headwinds, or not necessarily?
It would be wild for anyone, now that Raman is gone, especially for anyone on this panel, to say that it isn't. I think that in an uncertain environment, there's a risk-off attitude that with venture capital, it's harder. For sure, it's harder. There's no question about it. I think that you can see it in the TSXV. You see 633 TSXV, gold is 3,400. A lot of gold companies in the TSXV. So for sure, the more uncertainty and recession that there is in the world, the harder it will be to attract capital, which of course we all need in venture. That's just the name of the game. You got to raise money to make money later on. So I think that there's no question that it hurts, and I think that focusing on high quality assets, good places to be, around companies that are making money or places that people are attracted to, I think is a good way to go at this point.
Who wants to jump in?
I'll jump in on that. I think it's an awesome point. I mean, Matt hit the nail on the head. You want to be in the right place. You want to be in an area that obviously projects are either moving forward or big projects are in production. You need to be in jurisdictions that those bigger companies want to be in. And hopefully you've managed to lock in some capital before we hit this kind of bumpier road, as I was referring to earlier when we were chatting, Mark. It is uncertain. It is crazy right now. And if you've got capital packed away, you're funded for the work you're doing, you're going to be in a lot better shape. But access to capital will be there for the really good projects. it's just going to be much more difficult. You're really going to have things dialed in if you want to access it.
Dave, what about you? Aside from the financing issues, has there been any direct impact at your company?
Oh, we're watching Mr. Trump very carefully. I think this is a bit of a tempest in a teapot. I think ultimately common sense will prevail, and partners that have been partners for decades for good, economic reasons will remain partners. So we'll ride through this. I think the uncertainty is unfortunate right now for a lot of us that have great projects, have great exploration upside, or on development track. To raise that capital in this market is pretty tough. But we've at Grid, I think, spent a lot of time looking at alternatives, and I think everybody's going to have to do that. There's lots of options out there. There's, your conventional royalty sales, there's streaming, there's a whole range of other things. Joint ventures for us with majors, mining companies that have cash flow in the right commodity space is a good one. And, owning 100% of nothing is not great. So having 50% of something that's financed by somebody else is probably not a bad strategy right now.
Erica, what about the challenges at PTX?
Or I think what Dave is saying right there is just being creative, right? So just looking for additional ways of finding the money, but mostly I think like for PTX, it's a matter of like, all right, let's try to avoid much dilution. We still want to keep moving forward, right? Like you still want to do some work. So it's about like optimizing like spending. So you're rethinking like everything, like how are you spending it, like who's doing the work and where, etc. Like it's it gets a little tight sometimes, but we're becoming very creative to come up with step-by-step approach and to keep building values. That's what we're doing.
Matthew, back to you. Do you think that the tailwinds for copper the next decade, let's say, and longer, are so strong that they will supersede and override any of this near-term uncertainty?
Probably not. I think that as I manage portfolios, I think that again, high quality assets and things that will emerge for sure. I think that in a macro environment that struggles, everything's correlated on the way down, right? So I mean, we've seen it in all the bubbles that have burst over the last 50 years. Like it's not like everything is just safe because the commodities are doing well. But I do think that I personally really love copper as an investment vehicle, not just in sterling, but anywhere. I think that there just aren't that many left. They get deeper, they get lower grade, they're harder to access. It's just hard. It's hard to find copper, right? Like it's not, and it's something that is so economically fundamental to our growth as people. I mean, anywhere you go, you need copper. So I think that eventually in the long term, for sure, the venture industry, our long term is like 2 years, right? So I think that there is definitely, you got to weigh that, and I think that access to capital is really important. But it's definitely a hard thing when you're a venture company in uncertain times, right? So and I think that if we can kind of fight through it, be conservative with capital, really focus on things that could have very high upside, that will make sure that people are still in the space.
Adrian, what's your view on that?
Yeah, well, I think it ties in. Again, I think Matt's kind of on the money, and I think that he and I have spent lots of time talking about this with Midnight Sun and with our projects. I mean, this is where you have to be looking at, again, as he just said, these deep projects that are going to be extremely capital intensive. People talk a lot about block cave models. I always like to say in presentations and any of my speaking engagements that those are great in theory, but you have to remember that all of that capital is going to be required in year one. So when you're talking about $2 billion or $3 billion or $5 billion in CapEx upfront for a deep project that might be 2 or 3 kilometers underground, the probability of getting it into production is very slim. So you have to be looking at 2 things. You have to be looking at depth of mineralization and assets that can actually be moved to the finish line more quickly, which is the backbone thesis to why we went into Zambia 10 years ago. These are strata-bound deposits. They're shallow. They're less than 150 meters from surface, and they're high grade. That's why everybody's there. That's why First Quantum is there, Barrick's there, Rio Tinto, BHP, Glencore, Anglo. Everyone is in Zambia right now for that exact same reason. And you have to look at optionality. So one of the key parts of our project, of course, is the oxide copper production component, which we talked about very briefly in our presentation. But it's a good example of where you can look at how you, A, get a stream of capital coming in to develop the rest of your assets, and B, how do you create optionality to set yourself apart and not be reliant purely on going to the market to try and raise money with retail. That's an incredibly difficult thing. So for us, I mean, we can see a window to $1 billion or $2 billion in capital coming in from oxide copper on our property. That's all going to kick off very near term. We're working with First Quantum on it. We think we can get there in about 12 months. That's extraordinary. Doesn't happen very often, but it underpins all of those bigger assets we're trying to develop. And I think that's, playing into that same thesis. That's how you can avoid some of this and certainly move it forward. So
David, for you and the team at Grid Metals, do you think that if you just do the work, keep your heads down, a year or two from now, if not sooner, you'll come out the other side and things will be on track and looking good?
Yeah, I think the truth machine has to be deployed on all of our projects here, and we've got ourselves in a situation where we need drilling on 4 different projects for copper. And once the concept is proven, and you got four swings of the bat with Grid on our copper portfolio, that's de-risking for investors. And we simply just need to get a few $1 million together over the next year or so to get those drills turning. We like the jurisdiction we're in. We think jurisdictional risk is a real concern for copper going forward. And I think as a critical metals producer in North America, there's lots of homes for our product in the future. So we believe in copper. We think it'll carry us through. And we've got a little bit of cesium there to just sweeten the story for Grid. So maybe that'll help pay some bills too.
Erica, do you want to jump in? Any thoughts?
Yeah, I just want to say that, on top of it, because of the, we're in the ring of fire and we've, heard quite a bit about it recently. I think right now it's a matter of like the government and the politics to come in and really push everything through. I think that there has to be major investment coming in from the government as well to make it happen. There was some really decent work that were done, like with First Nation locals and everything else. So now it's really time to for Canada. I want to talk about the world, but here, we're in Canada, and it's really time for Canada to make a big move, and it's going to be a real nice push for us as well, like a real upside. And I hope the market will follow with it. It's a different story, yeah?
Well, we know that getting the ring of fire up and running, so to speak, or developing it has been a real slog. So that leads nicely to my next question. Do you think that in Canada, Ontario, Quebec, across the country, and the U.S., there is a generally favorable environment? And Matthew, you can kick this off if you like. A generally favorable environment and policies for critical minerals?
Sort of. I think I'd say sort of. Like some of it is great, and I've worked around the world and invested around the world, and not a lot of guns pointed at you here, and not a lot of, everyone's very friendly and nice. The hard part here is a little, we're always in the top of the Fraser Institute. We've tried to focus in Sterling on places that are the highest place, like Labrador and Ontario, lovely places to be. I think the only thing that maybe the government could do a little bit better is create a little bit more transparency. So I work with a lot of different exploration companies across the country. So speaking specifically in Canada, and you have a lot of CEOs who come in, and you could be a geologist who's worked, or you could be a finance person, and you go in and you're like, all right, let's go drill, and then you're supposed to deal with communities and First Nations, and no one kind of tells you what you're supposed to do at all, or like how you're supposed to talk to people, or what. And so I think that is that lack of understanding and transparency throughout each province, and then the interprovincial barriers aside from just trade. Same thing in mining. I think that just kind of having more of a standardized process, so to speak, to do it would probably help a lot here, because the environment is very friendly. You know, we're in Northern Ontario. Everyone loves mining. It's easy. You know, it's easy to get around, and people understand it. But definitely that would go a long way, I think, for government. And I know that they're going back and forth with a feedback loop. And so that would be my one thing. So otherwise, it's a wonderful, amazing place to work.
Adrian, what about Midnight Sun specifically in Zambia? You're generally happy with the policies there and the support from the government?
Definitely. Zambia is a really interesting thing. I actually did a presentation with the Secretary of Mines Minister of Zambia during PDAC. And we talked about exactly this. And again, it goes back to the last point I was making about what you see in Zambia, what you see in the Domes region, just in terms of the overwhelming presence of majors, of world-class mining companies, right? They're all there for the same reason, whether it's Glencore or BHP or Rio Tinto or Anglo or Cobalt or anyone. Ivanhoe just moved in, as I was saying, 8,000 square kilometers of land. I mean, that's a massive move. They're there for the same reason. This is an easy jurisdiction. They get it. They understand the thesis for bringing mining companies in and how to encourage them and what to do. And they've set, their president, HH, has set a global goal, or not a global goal, but a goal to move up the global food chain in copper production. They're currently about number 6 or 7 in the world, and I could be off on that by a couple of places, but their goal is to be number 2 or number 3. And they actually have the mineralogical endowment to do that. From a geological perspective, they have these big assets, you know, whether it's Lumwana at 1.62 billion tons or, you know, any of these ones, whether Kansanshi at 1 billion tons, they've got the geology, they've got the copper to do it. And so they're encouraging companies, they're giving us reasons and bolstering that activity and trying to encourage companies to come in, carrying out large airborne surveys and making sure that it's a great jurisdiction to be in. That's why everyone's there. So, you know, we're seeing a really great turn on that side. And certainly even having a Secretary of Mines Minister come and do a presentation with us alongside Barrick at PDAC in Toronto, like that just shows their attitude towards, you know, bolstering all of that, which is fantastic.
And David, for grid in Manitoba and even across the country, in terms of the various governments, do you think there's enough support? Are there any changes that could and should be made?
Well, the rhetoric is pleasant to hear on the critical metals side, but that has to translate into actual, tangible, measurable results. I think one thing that we're all worried about a little bit is the timeline for permitting, whether it's a simple exploration permit. Depending on where you are, it can be a very complicated and hard to navigate process. So more certainty on that. The one-stop shop concept sounds good on paper, but doesn't often actually work out that way when you're dealing with various departments and provincial governments in Canada. So that could be improved. And I just think on the mine permitting side, you hear a lot of, especially in the US, you know, fast tracking. What does that look like? How's that going to happen? The timeline to production is a critical negative for mining projects, especially looking at investors. And you've got the usual curve where, you know, the stock picks up at a discovery, and then while you're doing the hard work of developing, it goes in the tank until you're actually making cash. So shortening that period where it's a kind of a downturn in interest would be great. And I think whatever the government can do to help that out would be much appreciated.
Erica, what about the Ontario government and how it's dealing with the Ring of Fire?
Well, I think, you know, like I definitely agree with Dave on that one. It's like permitting anywhere you are, you know, like Ontario, Manitoba, across Canada, it takes a little too long, you know, exploration or any kind of permitting at this point, right? There's a lot of beautiful talks out there, and I really hope like that they're actually going to make the move. The thing right now is that we're looking at a major political change across North America. You know, start with Mexico, then the US, and now, you know, Canada is making big changes as well. So it's okay. You know, like those are the little bumps happening. I think that anybody coming in right now, like after those elections, like they're definitely going to know that there's a major break that has to happen toward mining, because Canada, I mean, they have so much resources to take advantage of. So let's use it. This is totally positive for the economy, for Canada, and starting to be a little bit more independent. So I know that all of that, like, we're looking at little bumps along the way. We're still going through some changes, but I think it's only going to be positive. We have to look, what's coming up in front. And we don't know if it's going to last 2 months, 6 months, 2 years. We have no ideas, but got to stick in. I think there's only positive coming up.
Okay, before we wrap this up, I'll give each of you a chance for some final thoughts, either on copper itself or your company's prospects and where your company fits into the copper landscape. Let's go back to you, Matthew.
Again, we're the early explorers looking for big things in Canada. I think that's where we're fitting. We have real team, access to capital, good people behind it, and we're looking for things that can put Canada back on the copper landscape on a global context.
Adrian?
For sure. Midnight Sun, of course, working in the Domes region of Zambia. Probably the top spot in the world right now for what we're all trying to do, which is find transformative copper deposits. Surrounded by just about every major company you could think of, the 4 or 5 biggest mines in Africa, and working on something that gives us kind of the unicorn in our space, as I always like to say, which is near-term production based on oxide copper. And we can see a view to a huge amount of cash flow for Midnight Sun if we're successful. Something that could kick off within about 12 months with First Quantum. And at the same time, 3 or 4 big targets for a globally impactful transformative copper discovery of one of these billion-ton Domes region deposits. Funded, working on those assets as we speak. We're not out there looking for money. We don't need to raise money. We're funded and underway. So we're right in the sweet spot right now as far as making a discovery and actually going into that supply chain and bringing something on stream.
David, your final thoughts?
I think for Grid, copper's got a huge part. It will be a huge part of the future of our company. The lift points that can come will be from discoveries. We're in big systems. We're in belts that have great pedigree for nickel, but have never really had a good shake for copper. And I think we've got a really good idea how to do that. We've got drill-ready targets, and there's multiple lift points for many projects. It is about scale. It's about pedigree. It's having the right geological environment and the right team to execute a plan. And we've got the plan in place. And I think if you keep your eye on us, you'll be pleasantly surprised how we perform over the next year or two.
And Erica, you have the honors of wrapping up the show here.
All right, nice. So I think, we're in a moment where we need to position ourselves, as shareholders and investors in general. In the case of PTX Metals, for us, what we're seeing is we're hoping for short-term and mid-term, real potential. We're in the ring of fire. Like I said, remember, it's on fire right now. And it is PTX Metals is the only exposure to what's coming up as of today in the market. So, I like it. And I think we have a very, very decent mineral estimate of 135 million tons. And it's going to keep growing. We're going to keep building a large potential out of it.
All right. Well, we thank you all for taking part. It was a very informative discussion. We learned a lot more, learned more about your companies as well. So thanks again. Have a great day, and we'll see you next time.
Thank you.
Thanks, Mark.
Awesome.
Thanks, Mark.
Thanks all.
All right. And thank you very much for watching. This will be posted to YouTube soon enough, and you can rewatch in case you missed part of it. And we're going to keep doing these. So thanks for tuning in, and we'll see you next time. Take care.